Hey everyone, it's Imran. I'm back again with a macro options spotlight. Okay, US stocks took off yesterday. A bit of optimism coming back around the debt ceiling. We also saw deposit growth from Western Alliance, which cheered the regional banks a bit. Europe, on the other hand, did remain stuck yesterday, and China slipped a bit lower as Tencent's earnings were disappointing. Europe, though, has rallied to a little bit of a catch up today, especially the DAX, which is up like close to 2%. So having a proper move. Looking at metals, precious did sort of consolidate. It didn't do a whole lot. But oil up 3%, copper up 2.5%, staging some pretty healthy bounces after recent weakness. Looking at vols did get hammered in stocks, particularly US indices. So we see about one and a half vols lower in S&P, NASDAQ and Russell. Pretty punchy. Obviously, much lower vol levels in Europe. We've been used to that, and realised it's pretty low there. Positive carry in Europe still, but those vols didn't really budge. And then you can see Nikkei's been rallying pretty strongly, right? It's up 3% week on week now, over 3%. It's kind of in the high 30Ks now, and that vol has been trickling higher as it's been rallying, right? Because it's actually moving quite nicely to the upside. Okay, outside of that, we did see commodity vols generally softer, except for uranium, which was small higher. And then, like we said, on the carry side, the only thing really to mention is uranium and copper actually moving quite a bit relatively. So they're providing some good trading opportunity for the long gamma players, but gold and gold miners still remain in positive. We did see skew soften in the likes of Russell and S&P. That's been holding up pretty stubbornly. Obviously, people are a bit worried about the debt ceiling, but as market rallied and vols came off, skew came off with it. We do think, though, the tail risk does remain. Wouldn't read too much into what the politicians are saying, looking for a potential deal by Sunday. Is there an incentive for them to really get a deal by Sunday? Unclear. I would say there's a fair amount of tail risk over the weekend. If they don't get a deal, then markets then potentially open lower again, right? So these are the type of swings we need to get used to. And then lastly, energy skew, finding a bid again, the likes of oil, nat gas and uranium, all a bit higher in terms of put skew. Moving on to some charts that caught my eye. So Western Nakamura was out on Blockworks and on his Twitter putting some interesting charts out. He's obviously always looking at the yen and the yuan and see if they're driving anything. So whilst equity markets have kind of been sleepwalking into OPEX this week, certainly S&P, and then they latched onto those comments from the US House Speaker McCarthy that a deal might be reached by Sunday, there's another corner of macro that doesn't seem to be looking too rosy right now, okay? And we've discussed China reopening narrative seems to have died, and this obviously been weighing down the commodity sector. You can see if we look out at the easiest way to get a gauge on the Chinese economy and what's going on is this dollar CNH FX cross, okay? And that's recently re-accelerated. This is the white line, and it's inverted here, and it's gone through 7 again. 7 is quite a big psychological level on this thing. And you can see as it's been moving down, it's been dragging the likes of copper, say, with it. Copper futures down here. We've got the Hang Seng Mainline Property Index as well. So the property sector in China, it's unclear which one leads which one in that respect because they're both China related. But the idea is that as the yuan weakens, dollar CNH goes up, and it drags some of these macro assets down with it. Okay. Now looking over at the S&P, which is obviously a macro asset as well, there's often divergence. Okay, so you can see the white line here is when dollar CNH goes higher, the white line is going down because it's an inverted scale, and it kind of tracks quite well, right? You get times where the S&P ignores it for a while and then it catches down, ignores it for a while, catches down, and we're kind of going through that ignoring phase right now where the S&P hasn't done a whole lot and the yuan is going again. Okay, so the question is the S&P going to wake up to what's going on in China? And are we going to reprice lower? For now, it looks like the S&P cares more about what's going on in the mega cap tech names, and the investors are chasing the AI growth story. We've had Stanley Druckenmiller, we've had Steve Cohen, all of these guys going on about these names and piling into these names. And we do think that is clearly a driver for why the S&P has not been able to sell off alongside other things. Now, it may be that once expiry rolls off, we do get this catch down. We often have it, these type of price action. But, it's one of those things, even if you get a catch down, it might be short-lived. We might get a debt ceiling resolution and then we rip higher again. But at the margin, it does seem like S&P is trading a little bit the wrong price versus what we're seeing across other macro assets. And I think there is potential for a bit of a move down to kind of catch up to what's going on here maybe next week if we don't get a debt ceiling resolution. Okay. Now, on that whole note, if we were to get a debt ceiling resolution, what is the trade? What is the thing that's going to rally the hardest? Okay. And if we looked at what happened yesterday, well, the Russell 2000 was certainly one of the big beneficiaries of the optimism around the debt ceiling. Okay, so you can see here IWM versus Qs, massive underperformance of Russell relative to the Nasdaq recently. We all know the story. Regional banks have made the Russell sort of out of favor, and then obviously the tech stocks with their decent earnings and their AI growth story. Everyone's been piling into that. However, we have recently just seen a big spike in call volumes on IWM, which is the Russell ETF. So some people are now looking at this as a potential buy the dip opportunity in Russell, okay? And maybe the catalyst to make that happen might be a debt ceiling resolution, and you could see Russell maybe pop a quick 5% or something like that, okay? That's what people are looking for. Also, you've got the CTAs looking positioned pretty bearishly in Russell because it's been in such a strong downtrend. So there is some short squeezing maybe potential if we were to see the Russell rip. Then these guys may be forced to cover because remember, they just follow the price and they may need to do that. So these are the kind of potential reasons why you might get a reasonable squeeze in the Russell if you were to get a deal. Okay, I'm not going for a deal in the next week, but if we were to get one, what's going to rally the most? Potentially this stuff. So implied vols in Russell are understandably a bit higher than other US indices since March, since all the regional banking stuff. So the question is, what would you do? How would you play it? Okay, we've got the dashboard here on the Russell. Obviously, the mean reversion trade is to buy puts in general for all equities. But here, if you zoom out a bit on Russell, it has been kind of languishing near the bottom of the range, and it could pop a reasonable amount if something was to trigger that. Okay, vols are still relatively low. That's why we've got down here in buy puts. But in general, carry's negative, so that means it's realizing pretty well. And then you look at the term structure here. Unlike Nasdaq and S&P that are kind of a bit steeper contango, you've got a bit more of a flatter curve, right? When you've got a flatter curve like that, it suggests you don't want to be buying too much outright vol in this thing. So spreads are probably going to serve you better than outrights. Okay, and then lastly, skew did get super pumped to about 8 vols. It's come down to about 6 vols. Okay, so now what would I do? The way I would play a kind of knee-jerk rip in Russell if we are going to get one is a short-dated call spread. All right, that's it for today. Thanks for listening. I'll catch you guys tomorrow. Cheers.